What's up, everybody? Good morning. Opening up to a nice rational market. Can't wait to see what we got. Hang tight. We'll get started in just a minute.
Talk to me honestly. I'm here.
This is social media. It's always been a dumpster fire, but lately, for brands, it's been extra dumpstery. How do I know so much about the subject?
What's up, everybody? We're getting started today. How are y'all? Good morning. Good morning. Smash that like button if you can really quick on a podcast. Just getting started, so take it easy. Nice rational day. S&P's at the lower DD band for the most part. What's up, fam? All right. Okay, let's go through and chew over some data real quick. Continued jobless claims came in under par, which is good. For that, it means people are getting their jobs back. Not necessarily, you want to keep seeing the jobless claim numbers getting worse so they can prove that the FOMC is going to behave less aggressively. So I think we're talking today about, let me go back to the data here. I think somebody was saying futures are pointing at a 50 basis points, so I'm not really sure Oh, that's gonna. I'm trying to look for the data on that. ECB 25 basis point. Oh, we're about to get started in 4 minutes. Okay, can somebody do me a favor? Check up on the Fed funds. Just see if like the what the probabilities are. If y'all can grab that real quick. I need to get started. Is it 50? I was shocked if it's 50 because I haven't checked. ECB lifted 50. US has 60% chance of 25. Oh, because that's what I was gonna say. That's a little off. I'm gonna say that I'm gonna take a bet that we're going to 0. That's exactly what I'm thinking. That's how I perceive that we're gonna go. So everybody do me a favor, hit that like button really quick. Let's get some algo love on here. All right, y'all. How are y'all today? Y'all doing anything fun, anything crazy? What's everybody smash like? David, what's up? Biotech, Jason, Michael, Terrence, Foster, Ryan, Andrew, Will, Mansour, and Quest. First person in class. I see. Okay, so really quick. Top left of my screen. Looks like we are connecting with the DD bands on the lower end of S&P, so the DD band rule no longer applies. It's rational, but trading to the lower band, no good. DD comes in positive though. We run to a bull side. The rule is not let's connect with the upper band. Just remember that. We've already touched one of the bands. When you touch one of the bands, the rule goes away, right? So I got the ETF account, the drawdown on those, if I can remember correctly. Remember, your first important trade on a 150K has to be your best trade. On a static drawdown account, as I'm reading, 1250 drawdown max. New alerts are dope. Oh, thanks. We're actually formatting them to look even better with save a little bit of space. Could we opening in 1 minute? Market's open. Let's go. All right, let's see what we get. Let's see if we got anything good coming out the door. Looking across the board, we have rational markets for DD band. We're gonna double check really quick. We have rational out the door. VIX is not breaking 3, so we're good on there. 2 of the rules look great. Let's get our liquidity maps coming through front and center, see how that turns out. Okay, let's go with our calculations come through. Resilience, nice, long, and strong. I do like that. Or how much are we gapping down? I think right out the door, I'm going to go for a resilience trade. Let it bounce a little bit, see what it does. The IWM coming through. The S&P in between the two hedge pressures. Resilience. Type 2 resilience. If the resilience positive, let's go. Let me double check. 52 and 20. Bouncing off hedge pressure. I do like it. Okay. Good. Okay, this is a long trade. I'm just gonna get 2 contracts. Okay, let's keep our fingers. Oh wait, shit, resilience just went negative. Hold on. Okay, that's okay, hold on. Let's keep an eye on that. I thought it was positive when my brain is all over the place. Gonna be. All right, guys, resilience was negative. I was distracted with the open. Okay, taking a look at this. Let me double check. I fucked this up the first day. Okay, hold on. 10 points below hedge pressure. I'll stop out if that's what happens. Res came in. I thought it was positive right out the door. I'm gonna double check on this. It was positive for a second. There's no way. No, that's got to be an error because it would show the history of that. I'm gonna get them to double check that really quick. It absolutely was like positive 60. Yeah, that's really weird. So this is not good. Hedge pressure, I'm sitting there gonna let it hold for a little bit and see what it does, but this might be a bad trade on this. Okay, hold on. Okay, so what we're gonna do is we're gonna exit the trade. I'm gonna let resilience play a couple of minutes. We are type 2, so this is supposed to be that resistance there. I'm thinking to exit right at monthly hedge and just call it some profit. Things are coming out pretty interesting in the morning. We have a nice kind of like opening run. There's 386.5 hedge pressure to 387.5 monthly hedge pressure with nice little tight space on the S&P. The resilience number, however, came in very negative. So we're looking at that right now, negative 35% on the S&P, negative on NASDAQ as well, which means we're going to have a hard time breaking up from here. It could turn around and start selling off from here. No evidence that the market's going to move higher just yet, so I'm kind of watching this. And actually, as I'm talking, resilience just pushed positive. So this is a kind of a gap fill pivot for the S&P and the NASDAQ. When this number is positive, what it means, the S&P actually wants to fill its gap to the upside. When it's negative, the S&P wants to continue to trade lower below its opening. So we gap down today. This number is pushing slightly above 0, so we're trying to see if this gives us a little hope the market's going to move. If we do press above 387.5 on the S&P, it is a nice squeeze at 389. So it's limited run up today. There's no rally, there's no reversal. We can't see anything like that. I did take a quick long, and I just closed that out. Just some tiny little scalp between hedge pressures and called it a day. If I were to take a guess, I'm going to give the market 5 or 10 more minutes to decide if it's going to move, because it is right on the fringe. It's just barely positive, so not enough for me to take an aggressive long, so I just took that little scalp. That's basically it. So all signs just point to likely downside, limited upside. So I would say that I'm not eager to take a nice long from here. I'm just going to wait it out and see if anything comes out. And 38.95, which is one of our irrational rules on the S&P, is likely about the trigger. So if we drop below that on futures, it's just going to be choppy again like it was yesterday. So like I said, I took like a little 5-minute scalp, got in, got out, put about $1,000 on the ETF 250 account, and just basically might be the only trade I find until that resilience number does become really, really positive. So I want to see at least 10 on S&P resilience to give me enough indication that the market's going to, or the S&P is bullish enough to want to aggressively long. But I'd like to take that 387.5 rate. So that's all eyes are on S&P today. I'm kind of ignoring NASDAQ and Russell because S&P is the one that's kind of right on the edge here. So get a monthly hedge break. That's a nice place for me to enter for that limited upside move. So that's all I can see. All right, so I ended up just cutting it out because honestly, I was just so distracted. I had so much bullshit going on this morning. So let me pay attention to the market and let's see what's going on. Okay, so the financial juice, I think we're talking about a 60% chance of a 25 basis point. I honestly, if I were to take a guess, I believe we're going to go to 0. I don't think the FOMC is going to aggressively push rates anymore. I think not 0 rates, but 0 rate hikes. I think we're pretty okay there. Let's pay attention to what's going on. The market is, we are in the monthly hedge pressure break possibility. So what I'm staring at right here is a 387.5 possible break. If we do move, bear long down does go to the upper 389 resistance. Do I like to put in a stop and enter a trade? No. If I'm on my computer, no. If I had to step away from my computer, yes. So we are positive enough on monthly hedge pressure resilience, right? For me to see, and IWM is in, so we're having hedge pressure breaks to the upside, which is good to see. Let me double check IWM really quick. We might actually have a nice long trade here. Resiliences are positive enough for me to get back in on the long. Let me think if I like what I see. See a nice red candle out the door. Yeah, this is good. I do like what I see. Get a nice red candle. Might take a little bit of a long on it. Okay, so let's pay attention to what we have now. Resiliences are nice and positive. This is the ETF Elite. This is the funded one. So SPY on monthly hedge break. Resilience is positive enough. We are going to pivot through and go through the upper band. I do like what I see. Let's go ahead and just put 1. Just 1. Things are nice and long and strong. DD's 46. Yeah, I'm trading right up to the upper band. This is textbook. Okay. So because resilience is greater than 10, right? Remember, it's greater than 10, greater than 10. It's more than enough to pivot through to the upper white band. So resilience pivots this white box right here. From low to high. So resilience is positive. It pivots from here to here. Resilience is negative. Pivots from here to here. We have a hedge pressure break, which is great. Hedge pressure resilience is the probability of the tiebreaker here, yellow to yellow. So yellow is also greater than 10. So it's probably going to support there. It's probably going to trade through the box there. Bear long down. Looks like this. Trades to the highest put wall in the zone and back down as resistance. Resilience positive, half gap supports to there. This is resistance anyways. This is less than half, so it's likely going to stay here as well. So it's a trade right up to there and close out. That's what I'm doing. Which one? Which one? Which number? Give me color. Oh, the upper band. Oh, I'm sorry, you can't see that. That is the close price of yesterday. So we gap down. We're trading to fill the gap to the upside. So just something small, right? That is really weird that resilience did come through so like crazy like that. I'm having him double check on that because it did spike through like really crazily. So maybe that just is what it is. Actually. So yeah, I didn't see it because of the scrolling thing that we're looking at. Something small. Again, paying attention to make sure resilience is in. This is the one number you need to watch. Monthly hedge resilience right here is the one that is the tiebreaker. So I'm going to use the small widget up here at the top. This is the tiebreaker at monthly hedge pressure. So we want this number to go above 10 as well to give us a little bit more confidence. So monthly hedge pressure breaks are always less common than holding. When it's greater than 10, we assume that it can break with high probability. So this is a great trade through the gap. All right, so 46, close enough. Yeah, I mean, it's bearish enough that I would bet that it doesn't go through and go to the bull zone at least today. Nice little decent scalp. Let's see if we have a liquidity pockets and pull some plays out the door here. Let's see if I got anything that's like bullish for all the stocks. Let's see if we have stocks bullish, liquidity pockets, VXX. Disney. Interesting. So yeah, this is a nice, good trade, long and strong. Just get right out the door. Let's maybe find something cool on this one. It's not frozen. What it is that, and I'm just gonna make it a little bigger here. It's not frozen. It just, it doesn't auto scroll. And we put in a ticket for them to fix that today, but it doesn't look like it got fixed. Keep an eye on, pay attention to this one here. Resistance looking pretty good. Monthly hedge pressure support. So I like what I see bouncing from here to here. So make sure to control the position sizing to be a little more aggressive. Right at monthly hedge, another entry long as resilience and stuff stays positive. Yeah, I'm like multitasking today. Watch me screw this up just for multitasking. Okay. Yeah, our candles. Okay, so here's what's going on my screen here. Touch that lower band. Resilience is positive. Oh, I like it. A little riskier. +1. Okay. Okay. I added on the dip to my 250 account here. I'm still really close on the edge here on the 149. I don't want to go too heavy on the risk. It's like a 1250, I think is the... Oh shit, I was getting freaked out there for a minute. Resilience is still positive. Things are looking good. This is kind of tricky. Wait, this is like a... Sorry guys, I had like a lot of... We had like multitasking's crazy. These podcast days get crazy. I'm on stream, I'm on podcast, trying to feed the cats, trying to get everything together. Yeah, for some reason I get a little flustered because the resilience wasn't showing it, but it was kind of, it's not auto scrolling. So it did show it, I just didn't see it. So it did come in positive and flip negative. So we're pretty good, right? This is a great textbook trade. Let's just draw it on my screen. I feel pretty good and confident on it. Let me get my pen really quick. Let me see if I can pull it. Okay, so textbook, right? Hopefully we'll see how it goes. It's gonna be a little tumultuous here, but let's take a look. Okay, resilience. Let's fill the gap. Pretty good. Hedge pressure is gonna be a bounce around for a little bit. I don't like that. BD less than half. It's gonna resist right there. BRLU pushes from there, pushes to there. So we have to get that breakthrough hedge pressure. It's going to take a little bit of move to get there. But with resilience being strong enough, it's going to work, I think. So I'm pretty good on this. IWM is red. Yeah, hedge pressure break to the upside for IWM, right? So those are, red just doesn't mean like going down. Red just means red, right? Red just means irrational flag is triggered. Red means is triggered. So things look pretty good, nice and solid there. I like the trade plan I got. I think it's pretty good. We bounce around just a little tiny bit. Anybody have any questions about what I'm set up to do today? What I'm looking for? Like I said, that'd be a nice little 20-point run today, at least for the first half of the market day. You know, your first trade on an eval account, a static drawdown has to be the most important one. It's a little risky. It's not a clean one, right? Hedge pressure break is not a clean one, but I'm more willing to, you know, I need to build some fat on that one. Just here. Because you need to get that, you need to get well above that $1,250 drawdown limit. To lose $1,250 on two contracts, or sorry, one contract, we'd have to fall all the way down to 38.86, right, which is 10 points below the DD band. So that's like way down here at the bottom. Mark that really quick. So we'd have to break through hedge pressure with 10 more points for me to bust this account right out the door. So like I said, I'm not super confident on this one. I'm gonna just do one contract to build a little fat. Let's see, right about 6 points, 3. Let's kind of take a guess where it will be. All right, answer some of your questions here. Welcome, guys. If you have not checked out Rocket Scooter, once in a lifetime opportunity for you. $35 a month. Never will be this low again. For 3 months, you can hang out, learn everything we have, you know, move on your merry way. You can stick around and learn from us. You can do whatever. You can take the risk management tools and techniques we give you on your journey out there, share with your friends, tell everybody about it. $35 a month for the once in a lifetime time we're ever going to do this. Yes, sir. Actually, I went ahead and the market's bouncing around this monthly hedge pressure, but all the resilience is going high. I just went long and just added to my longs right now. That push 389 looks very possible. All signs are pointing up. We have what we call our big three indications, right? They're all leading indicators that look for high volume and pivots. So DD number 1 is 0.46. When it's less than 5, we stay in the bear zone. So 389 is my upper limit today. Resilience being pivoting around 0 just shows that the S&P is more likely to fill its gap to the upside than it is to trade below. We're sitting pretty long on that 30 and 53 for NASDAQ. So remember, pivoting above 0 is bullish. Pivoting above 10 is very bullish. So 36 and 50 is good for my long side trade. We're about to break through monthly hedge pressure, which causes a squeeze, and the liquidity map shows that there is potential to resist at 389 as well. So any squeeze on 387.5, long to 389. This is a textbook trade, so there's really nothing I'm too scared about on this one. If resilience does go negative or we drop below 386.5, I'm just going to call it a day. But yeah, it's pretty nice. So I am trading my personal account and my 2 ETF. You know, I have my funded account going up and my 250 eval that I'm trying to do as well for ETFs. So pivoting through that half gap to upper 389 is where I'm going on the S&P. QQQ looks very strong as well. It's the stronger of the two, and NASDAQ is looking really great. 299 is monthly hedge pressure on that. And if we break through 299, you're straight up in a bull zone in QQQ. So it can move pretty quickly. Other than that, I don't see any signs of turbulence. Nothing's really scaring me in the market. So I do like what I see, and we'll see how well this goes. DD bands today. They're the same. The DD bands are always the same as the Nightbot. I just rerun the conversion in the mornings. I just didn't have time to do it today. Sorry, there's a bunch of BS this morning I had to deal with. It's me. I get like, my phone was like connecting to the Bluetooth in the car. I was like, where's my volume? So I was like struggling just to sit down. Last thing I would do was blow up this funded account the first day I started trading. So ECB lifted 50, US now has a 6% chance of 25. Is it 40% chance of 0 or 50? What's the 40% chance? It did show, yeah, and resilience did show positive. It's just not auto scrolling. So I have them with a patch to fix the auto scrolling. So that's one of the things we are doing. So QQQ right now is at the upper, this is one of the things that is causing resistance. I didn't pay attention to this morning. QQQ is hitting that gap fill. So the reason why I was wondering, like, why is the S&P hitting resistance and not just running straight there? And it's because QQQ has that monthly hedge there. Good, we're about to get the trade. Yeah, let's fucking go. So the top account, this one right here is the actual funded account. So this is now going into the one that says elite. So this is my funded account. The one at the bottom is my 250 eval I'm still trying to pass. And that one needs 15,000 profit. So I'm actually halfway there now. Do I like to put a stop when I enter a trade? The reason I like to put stop market losses when I enter a trade, because this is an example, and I love to quote the scientist Neil deGrasse Tyson. He used to say that, you know, on the Joe Rogan podcast, Joe Rogan asked him, he says, why? He's like, why are you always twirling your phone in your hand? You know, like you're always spinning your phone in your hand and you don't have a phone protector on it. Why do you do that? He goes, what do you mean? Why do I need a phone protector? I don't drop my phone. He's like, how can you know that you don't drop your phone? That doesn't make any sense. He goes, no, it does. I mean, the military cadets, they practice twirling their rifles, right? And why do you practice twirling your rifles? Because whenever you're twirling your rifle and don't drop it, it's so you learn not to drop it. You don't drop your rifle when you're spinning it around, therefore you won't drop your rifle when you're holding it in combat. So he goes, I don't wear a phone protector. I don't have a phone protector, and I'm always spinning my phone because I'm paying attention to the phone that I'm holding. If you're paying attention, you're going to take it more seriously. If I put a stop loss, I give myself a false sense of security, like, okay, that's going to take care of the problem. And I also have to reveal my hand, you know, to my brokers. It doesn't show up in the level 2, but I also have to reveal my hand. I'm here to pay attention. I'm twirling my rifle in my hand. I stop when I want to. I never lose control. I never give myself the ability to not have control of my rifle. So if I put a stop loss, which is good form, I know it sounds like this crazy guy is not telling me not to use stop losses. No, you should use stop losses until you learn how to not drop your rifle. I've been doing this for 13 years now. I know where I need to stop, and I push that button every single time. If I have to leave my computer, always, always, always a stop loss. A stop loss turns into a market order when it's triggered. So when you leave it there, if a catalyst comes through, the market can blast through your stop loss, gap down, and you get filled at a random spot, because once your stop loss triggers, it fires off an order. That can actually act disadvantageous to you. In those events that a spontaneous catalyst happens. So as long as I know that one risk interval is not going to blow me up, that's what a catalyst can be. I'd rather hold through and then let it have some recovery and then close on my own, because the market doesn't just ever fall 50, 60 points on a catalyst. We know it falls one risk interval, right? To test. So one risk interval, it will halt. I can close the button. If it triggers a stop and it throws a market order at my close, I will get filled where the gap stops moving. So I force myself to trade. It's not at your stop loss. See, that's the thing. People don't understand what a stop loss actually does. If I put a stop loss at 39.17 and the market drops 30 points and velocity logic triggers, which means the market halts trading and resumes trading at the bottom, my market order gets filled at the bottom. It does not get filled where your stop loss is every time. It just converts. If it basically a stop loss automatically moves your mouse to here to push that button for you. That's all it does. It is not a special kind of order. It is a thing in your platform that is a market order. So why do I need my platform to forcibly drop that order when I can do it myself? So I twirl my phone in my hand so I don't drop it. Does that make sense? But anytime I leave, I do that if I'm not paying attention. So anytime I take my eyes off it, I'm not paying attention. But I don't want to also, while I'm sitting here, condition myself to not pay attention, right? So to know actively where my stops should be, instead of just putting it there, I'm constantly thinking about it instead of, okay, it's there, I'm fine. So I'm twirling my phone in my hand like Neil deGrasse does with his phone, right? I'm practicing spinning my rifle so I don't drop it. Where am I stopping? Right down below here. No, because Benji, I just explained the mechanics of how that works. It's a market order. You think if I put a stop at 39.17 and you pass through 39.17, you get filled at 39.17? If the market's gracefully trading down below it, yeah, you'll lose a tick. If J Powell comes up and says they're raising rates a basis point and it drops 30 points on a dime, you didn't get filled at 39.17. You got filled at 38.90. 30 point. You'll get filled 30 points lower every single time on a catalyst, on an event. The market drops there. It triggers your stop. Your stop throws a market order, and you're at the end of the line. And when the market just plunges those 30, you will get filled somewhere 15, 20 points lower. The market will typically do this and start to bounce. A stop loss will get filled right there. If I hold on to it, I have my position sized so I don't lose or blow up in that time, because I know every risk interval will halt and move up a little bit. I can manually close the button and get out better than my stop loss will. That comes with practice. If you guys paid attention to the Catalyst class, you know that. Everyone that traded the Catalyst class is looking at me going, oh yeah, I do know that, right? You get filled in a shitty spot. All right, we're gonna close out the 150, that 600 bucks profit there. I'm gonna go ahead and close out on the 250 account. There's profit there. I'm gonna go ahead and close out my personal account. There's profit there. So total, I made 3,000 on my personal, 3,200 in the 250, and 620 on the 150. This is my real money. So that's like a $4,000 profit day. Close everything out, made the profit. How much did you make today? Did you make trades? Oh, nice. Closing out, hit that upper 389 on the top. Nice textbook. Let's get some rockets in chat, baby. Throw them up, throw them up. Let's go, let's go. Just chime again here, Wolf. I just closed. We hit that 389 target on the S&P. So I just closed out on all my longs, liquidated everything. So that was my scalp. Sorry to interrupt. Done trading for the day. Everybody, baby, let's throw them rockets in chat. Let's go, let's go, let's go. Okay, so my student was asking me about, and you guys all y'all know my student. Nicole is working through her ETF eval accounts. She's trying to get into futures trading as well. So she asked me today. We are trading. We understand. Let's just do some quickie lessons. And if you guys haven't checked out Rocket Scooter, we're gonna do something today. Let me make a little post about it. We're gonna go through my trade plan really quick. Okay. One second, you guys. Are you guys enjoying the Trader Training Bootcamp, friends? Okay, so I had a quickie question here. Let's go over my trade plan real quick. I'm about to speak on this podcast, so hold on one second. All right, let's hear if you guys making trades today. How'd y'all do? And yeah, the stop loss thing is it's for me to never have a false sense of security when trading. I know where I'm gonna stop, and I have the discipline to do it. We tell you guys to use stops because you don't have the discipline to do it when trading. You see me not use it because I have the discipline to stop. I don't want to have the discipline to allow my, because a lot of times people will put a stop and it starts falling to it and you'll go, let me move my stop. If you move your stop, you made the whole process useless to begin with. Y'all understand that? Everyone understand that? Right? So a stop means that's your point of no return. If you put a stop there and you start wiggling it around and moving it around, you're not using a stop. You're literally doing the same thing I'm doing. You're discretionarily choosing where you get out. It's only a safety net for when you sit there. And the problem is, if you want to stop limit orders will guarantee you your what a stop does is it converts your desire to exit or enter a trade and puts it either as a limit or a market order. So if I put a stop, it just tells my platform to place an order. So if it's a stop market order, which is a traditional stop loss, all it does is forces my platform to execute a market order there. A stop limit forces me to put a limit order there. So you can either do stop market, stop limit. Either way, like I said, I like to never give myself a false sense of security. I know exactly the number I need to stop at. I know that when a market catalyst comes out of nowhere, I'm always prepped and ready to go. I never will miss it. I'm sitting here, I've got my news parser up front. I know if there's a news event coming out. We know, and if everybody in class will tell you, when an event happens out the door, the worst event, rate hikes, whatever, how far does the market typically just drop when you snap your fingers and it drops? As long as you're far enough away from a circuit breaker, how far does the market typically drop? I'm about to talk in this pocket, so hold on. One risk interval, right? Does everybody understand that? What's the distance currently from our bot of one risk interval on the S&P? 29.5 points, right? Can you see this one? Is your computer? Should I move them over? I'll move them here. I wish we had like magnets. I can like. Okay, as long as it's not tickling my leg. Can you see this? Okay. I'll just do this. You want to make that sound? Can you hear that sound? I have fat hands, don't I? Hold on one second. I'm about to blow your mind, Bob, and everyone else with the stop loss conversation. Trust me. I do better. I perform infinitely better than my stop loss. Okay. So I'm going to teach you guys something that's going to blow your mind. And listen, anybody can say anything or not say anything. You guys watch me trade. There's a reason I do what I do. Okay. So do we all agree? Let's get some yeses in chat. We'll have a couple lessons today. Nice job. Okay, hold on. Wait. Ryan, kill it. Good job. I'm reading else comments today. 20 points on yes. Terrence. Ryan says, can we use this on futures? Yeah, absolutely. That's all I trade is futures, pretty much, on the most part. Here. So, liquidity maps are something. See, I use a lot of tools, right? Liquidity maps are something that give me a little bit of extra juice using the equities equivalent. So the S&P, we know where S&P pivots can be from S&P SPY options. So the futures will pivot where the options are pivoting. I trade off of my SPY pivots and push the button on S&P futures. So yeah, God, you guys are awesome. Jason, awesome. Shmed, need to make sense of today. Today's a resilience trade from A to B. It's very simple. Today, if you go to the extended trial and sign up, we'll make sure you guys get into the class. We'll talk about today's setup. For the top of the map, be considered a short by the same rationale if you reach it. It absolutely is a short setup. Bear long down, if you look right here, highest put while in the zone, shorting back to the middle is a short op. That would be 389 back to this middle, which was about right there. The mid distance, this is a tricky one, mid distance from hedge pressure to the highest wall. So the mid distance from 86.5 to 89 would be right about here. So from here to here was a scalp. That's this scalp right there. And again, I'd only short from here to here and call it a day. So what I do is I use the three tools. This is a leading indication on the S&P being bullish or bearish. If this number is less than half, we will end up in the bear zone. If you open the bear zone, you'll stay in the bear zone. This is bear zone, lighter gray. If this number is greater than half, I look for it to push to the bull zone. Simple pivot. If resilience is a pivoting between the open and close, it's a gap fill predictor. It's also a leading indicator. So when resilience is positive, I look to push to fill the gap that way for the first trade. If resilience is negative, I look to push to fill the gap this way. So the fact that we're inside of this redistribution zone and resilience is very positive, I just traded to fill the gap this way. However, this being the first target, I got out there because that bear zone resistance is a resistance, just like the fill the gap is the resistance. So I don't hold to fill to the second resistance. I get out of the first thing that I see that's in the way. And liquidity map shows me there is resistance from there already. So I got three places that tell me the market's going to resist. I've got resilience telling me to go there, or telling me market's likely going to fill the gap. I got DD telling me that this is likely going to resist, and I got liquidity map telling me this is a short to there. And look at that. That's exactly what happened, right? These are all leading indicators, and I traded my futures that way. Okay. My point system and doing R&R. Yeah, I'll explain my accounting cards, quote unquote, point system and R&R today. We'll talk about that. So everybody come to the classes. My first move is almost all my stuff is almost always based on resilience. Resilience is the most, resilience is like the Swiss Army knife of trading indications. In the resilience video, I show like 8 different ways I use it. People were using like the mind blown emoji for all the ways resilience can predict hedge pressure breaks. It did today. Resilience can be used to pivot the open and close. Check. Resilience can be used to tell me so much stuff. Resilience can tell me if I'm in the wrong side of a trade before it happens. All kinds of things it does. It's my favorite tool. So let me explain to you why I personally, again, the reason I don't, like I said, the reason Neil deGrasse Tyson doesn't put a protector on his screen and twirls his phone while he's talking is not because he's fidgeting. He practices not dropping his phone. He practices paying attention to his phone so he doesn't need that awkward, weird, gummy screen protector that makes your screen look like shit so that you don't just randomly drop it. But you have a screen protector, you're more prone to be careless with that artifact, that priceless thing in your hand, aren't you? Like, let's think about the psychology of a human, right? Does wearing a seatbelt lower the probability of you wrecking your car? No. Does it lower the probability of you dying if you wreck your car? Yeah, right? So does putting a stop loss lower the probability of me making a bad decision? Or no. Does it increase the probability of me making a bad decision? Well, I don't know. If price is moving to my stop loss, how many of you have ever moved a stop loss? Just quick show of hands. Like you have a stop loss, but you've moved it around. Like you get to the stop, you're getting close to the stop. Let me just move it like 5 points lower. Has anybody here ever moved a stop loss? If you've ever moved a stop loss, then the stop loss design has 100% now failed you. If you can move a stop loss, that's discretion. You made a choice. So if you've made a choice, what good is a stop loss? You made an initial decision that you changed. You're basically just moving where your platform clicks the button, which you can click the button yourself. So if you move a stop loss, then you should never use a stop loss again because you're the kind of person that would move it around. And when markets are chaotic and you're losing your position, and you're moving it around and justifying what it's supposed to do, then you're not using any philosophy that really anchors your stop loss to do what it's designed to do. This is where I pull the emergency chute and I'm out of the trade. So if you've moved it around, which is everybody, and which is why I always say this is one of my favorite things I teach advanced traders. Now again, new traders, please use a stop loss. Don't get me wrong. People ask why I don't use one. And it's because I like to choose when and where I push the button, and I know the speed of the market and how far markets will move. And my position size is always such that I never blow up when an event happens. And that I can exit a trade about where I want to anyways, in pretty much all circumstances. If we're 10% away from we're like about to hit a circuit breaker, which is rare, right? In those days, I don't even trade. I don't even trade on days it's possible for that to happen. So if I'm not trading irrational days and I'm not trading crazy volatility days, then the chance of the market just spontaneously dropping outside of my control is almost negligible. It's almost zero. It never happens. The only thing that can make it happen is a catalyst, a spontaneous event at that point that turns into a catalyst. If I'm trading rational markets inside of DD bands, not trading hedge breaks, not trading crazy volatility, hold on. So the only thing that can really squeeze me outside of my control is an event. Does that make sense? Markets don't spontaneously just collapse. For no reason, do they? They don't. A news event comes out of nowhere that's a surprise event is a rare thing, but that's the thing that can actually move against me. No, I didn't have a stop loss there. What do I do? Well, we know that the market will move at least a risk interval on an unplanned news event, and it usually halts there and figures out what it's going to do next. If I had a stop loss or didn't have a stop loss, I probably would get out the same spot, one risk interval lower. If you think your safety net placed right here to stop you at 39.03, if the market plunges 30 points in a snap of a finger, you didn't get filled right here. Your platform threw a market order, and your market order gets in line behind all the market orders that came in at that time. And if the event triggers velocity logic, which happens to be the place where the market halts trading and the market makers regap the price, it just gaps to that level most times. And your stop loss, whether, say if I had a stop loss right here at hedge pressure and the market dropped 30 points. Let me just kind of drop. The only thing, like I said, the only thing that can thwart my plan is an event. I only trade within tolerable, stable times. I don't trade when markets are irrational. So the market never surprises me. I can always choose to get out at any point in time. The one surprise is an event. Fed's gonna raise rates 5 points. All of a sudden, market goes right to there, okay? You will notice, and as we always tell you, a risk interval is how far the market will move before it tests. Do you guys understand that? That's from the Catalyst class. Real P&L says, did you miss my question? What, in chat? I didn't see your question in chat. Where can I see your real money on the 10K account? Okay. Oh, you're saying, why am I trading this ETF account? Okay. So Rocket Scooter being a company that's been initiating partnerships, right? Since we're always, 10 steps ahead of our competition and things that we're doing as a trading platform, and I'm just trading using the platform. We had this partnership being worked out since late last year. We started talking about October. And so on my stream, I was just doing my own personal challenge until this partnership went through. And clearly, that wasn't a contingency that we announce everybody, because we don't, announce our partnerships before we make them. So I said, I'm going to trade it. It's still going. I'm mirroring the same trades here. But as soon as the partnership took effect, we had our first space on a Thursday. The very next day, I decided to pivot the company into showing off our partner product. So for the meantime, it would be nice for me to be continuing. Again, it'll be, I'm sorry, they're talking about the pockets. It'd be great to just continue, make our partners wait a couple months while I continue to push that same challenge. But the agreement was that we were going to show their product, and we told them that we were. So immediately when the partnership lifted off, we had to pivot the very next day. So that's just how it is. But I mean, I'm trading, same thing. P&L statements are in my Discord. It's the same thing. You're welcome to join the community and you can see them. So it's just YouTube's focus is to focus on our partner product. So hold on. Oh, he's asking me. But we explained that, I think, the day and the next day and the next day, why we changed. So we're about to, okay, let me just give you guys another hint. So it was like, hopefully, I didn't think we were gonna kick it off so quick. I thought we were gonna have time until summer, so I did think I had enough time to do the 100K challenge before that partnership kicked off. But word came down the wire, says, yep, we're ready to go. Let's get started. They started doing spaces. We're on their space on that Thursday. The immediate following Friday, I had to kind of do that. So Trade of 8 doesn't let you log into 2 accounts at once. So if they did, I can manage all 3 accounts in one spot. If I were to do that account and my other account, I'd have to put 2 different instances of Trade of 8 on my screen, which just removes Rocket Scooter from the screen. Clearly, I want Rocket Scooter to be front and center. When we can trade futures, Rocket Scooter will be fully front and center. So then let me reveal to you to the next thing. Rocket Scooter is about to be futures trading itself. I'm gonna be trading through a different broker, not Trade of 8. So when we do that, I will reinitiate my own personal challenge if I finish the ETF thing I'm doing. So that's just part of the business plan of Rocket Scooter. Unfortunately, you had to do something on the stream for a little bit, but you guys got to watch a 28-day win streak. 5 days, 80-something% win rate. I was able to get the funded account kicked off. So I got a 150 funded account. I am 6K away from a $250,000 funded account. And these P&Ls are posted, real P&L, whatever your question. You can join our Discord. They're there. Any more questions anybody has? But yeah. So in the meantime, until we have futures trading, what I'm going to do is do all my futures trading here with our partner product. And I'm going to move into another partnership we're about to kick off, which I can't announce what it is, but let me just give you an example. It's going to be, I can't even say it. There's going to be another thing that we're going to do. It's a pivot. I can't tell you what it is. I can't hint at what it is because, clearly to maintain our competitive advantage, we can't reveal our partnerships before they happen. But something new is about to happen, and that focus and that 100K challenge is about to be focused with another thing that's not futures. Hint, hint. Okay. Hint, hint. Like I said, if you guys want to try Elite Trader Funding, we get 30% off for anybody that uses it. There should be a link in my description. The next partnership will be related to the equities world. I'm just going to say that straight up. So just letting you know, let me show you the P&L just in case you want to see it. I posted in the Discord. So immediately when I pivoted around to doing the ETF account, this is it. It's the same win rate, 80%, historic. This is when I started the challenge. I started the challenge actually on Monday, Trade-of-8 data froze in the middle of the day. You guys remember that Monday, the 6th, I think it was? So account dropped a little bit. I just immediately decided to call mulligan that very first day. I go, it's a mulligan. So we initially kicked off the partnership Friday. Thursday was the first space. Friday, I toyed around with the format and how to, mechanically work an eval account, because I've never done one of these things before. And then I said on the stream, I go, Monday, make an announcement. We're going to be running, trying to do these eval accounts, really strict rules, really strict drawdowns, and I bet you I can pass it the first time. And that was my new challenge. And so Monday kicked off. This is the history for those of you that missed out. Trade-of-8 data froze up and I got locked into my trades. So essentially, like, the data froze. You guys remember, for a couple hours for a lot of people. Couldn't make new trades, couldn't get out of trades, none of the data is working. So I manually reset both accounts and started over on Tuesday. I think I sat out Tuesday, made my first trade on Wednesday, as you see, and this was my first foray into going into the funded account. So from here to here, went from 150 to 155 or 154, whatever it was. And then now this is me trading the funded account, and today was 600 bucks. So there's the history if you guys have any questions going further. So yeah, it's my futures trading has moved to now 3 different places, from here to here to here, but you can chain it all together. Does this satisfy your question? So yeah. And then when we open Rocket Scooter futures trading, which will be done in this quarter, I'll be doing my real challenge account and my own futures account here. Clearly, my goal on the YouTube is to show Rocket Scooter product on top of everything else. So being able to continuously string Trade-of-8 forever, we're not gonna be able to trade through Trade-of-8. So I have to move to a new futures broker, unfortunately, and a new partnership. They're calling it BBS. I'm not gonna lie, I'd love to partner with Black Box Stocks. They're great, but I'll tell you, it's not Black Box. Okay. So this particular question here, and like I said, we have a P&L channel. I post all my broker statements there. You guys are all welcome to go check it out. But right, you'll have to get used to the idea that Rocket Scooter is going viral right now. We are getting all kinds of new arrangements, new partnerships. We're being invited in the media to talk in different podcasts, different things. It's a big deal for us right now. We gotta pivot if things arise, and that, unfortunately, it's just gonna be what happens. But I still show my trades and still show the results and still show the stats. Okay, so if the market drops randomly, typically we know in the catalyst class, it typically falls one risk interval before something happens. One risk interval is a massive volume spike. Typically it'll drop there and then figure out what it wants to do and then continue to trade down or up. So in a protocol, it's called velocity logic. This is actually something that happens in futures. You can go Google this. Velocity logic is a time period and a tick. It's a time limit and a tick limit. If the market drops X number of ticks and Y time, you say, what is a tick? If you guys remember, ticks are each one of those, right? And time, you don't know what the time is. These are proprietary indications or proprietary factors that the Globex uses to execute this protocol. So what happens is, if so many ticks change, if the price changes so many ticks in a certain amount of time, this protocol triggers. The market's too illiquid to handle order flow. So an example is somebody comes in and drops 10 million contracts to sell on the S&P, just as a market order dump. That will completely nuke the market, right? You will clear out so many ticks so fast, you can drop the S&P 50 to 100 points with a single order. So velocity logic prevents that from happening. It is a automatic short, ultra short circuit breaker that triggers, that halts the market for like a millisecond, okay? And what happens is, you'll see that all that happens is the market will just, you'll have these, if you go to a tick chart, you'll see these like non-overlapping candles. And then you'll see like a big candle, and then you'll see this, and then you'll see trading resume. What happens is that the Globex will pause It'll fill enough orders to trigger the logic and takes the remainder of that order and kicks it off the market and allows market makers to mobilize liquidity off the books. So basically it says, hey, I need somebody to take this order temporarily. We're halting the market. And they auction between themselves and one of them takes it. And then the market just halts, like essentially if it triggers right there, market halts. Then they run what's called the IOP. The IOP is the indicative opening price. So IOP is a calculation that the CME group also created that allows the market to gap down to the appropriate place to discover where liquidity should be. It's a calculation that gaps futures. IOP is run every day between 5 and 6 o'clock. When the Globex reopens back up, that opening price is calculated by something called IOP. You can Google that as well. CME Group has all kinds of videos on these two things. So at the halt, they run the IOP, which is another equation, and all it does is it drops the price somewhere else and then opens it up. So any market order, for instance, if your stop loss was here and the market hits the halt right here, the IOP will gap through to there. Even though your stop was here, all it does is it fires a market order at the market. But when markets are halted, your market order gets rejected. The Globex protocol is to reject the market order when it's halted. Go try to submit a market order between 5 and 6 o'clock. You'll see what happens. It says order rejected. Your stop loss can get rejected in the fraction of time that it's halted. Now, for the most part, if that isn't triggered and it just drops straight down, you still throw a market order, but you get in at the end of the line. And traditionally, even though your stop is here, whether logic triggers or not, your stop loss submits a market order and you typically get filled like way down here, even though your stop was way up here, because you're a retail nobody and you're at the end of the line. So your market order is submitted at the mercy of the market maker. And it's first in, first out, and you clearly are last to come in when that brokerage is triggered and your order flow has to route from broker to Citadel to, all these places they route your order to make money. You're like last in line for your market orders. So what happens is if I have a stop right here and price plunges on an event and does this, you will see that you probably got filled right here somewhere. But what we do know is that on an event, you very rarely will break one risk interval on the worst case scenario before it does something. So I believe that I can choose to exit where it normally will throw me, or maybe sometimes slightly better. And sometimes that event happens in the blink of an eye. If I have a stop loss, it's around one risk interval away. If I'm away from my computer, for sure. But what I do to battle this is not use a stop. What I do is I have a position size that doesn't allow a 29.5 point insta drop, which is calculated by our bot, to blow up my account. So round this to 30. How much money does the S&P gain every 10 points, student? That's every point in 50. So 10 points would be how much? 500. So if 10 points gives me 500, 30 points will get me how much? 1,500, yeah. So $1,500 a contract loss on an insta drop. If you statistically look at every single time that happens to you and every single time you lose a stop loss, you will not do any better with the stop loss. So if I only trade rational markets and I only trade within a position size that doesn't allow an insta drop to blow up my account, then I will perform better than just leaving a stop loss and remove the risk of allowing myself to be lazy. I believe that professional traders, if you put down a stop loss and move it around, you're not even using your stop loss the way it's supposed to be. Like, this is where I'm out, never gonna move it. If you move it, then you might as well just not use it, because you're giving yourself discretion. The difference between a stop loss is you're supposed to not have discretion. I'm out here no matter what, or I'm throwing a market order here no matter what. If you don't use one, you have discretion. You have to make yourself push that button. I push that button every time. I never move my I call it a soft stop. I never move. If I know I'm stopping here, I push the button. I don't leave an order sitting there, allowing a stop sweep to just flush me out. Sometimes events do that, okay? And you had a stop right here. You got filled right here, and then all of a sudden the market went. Half the time, an event can go the other way. I've learned over time, this philosophy has saved me more than it's hurt me. But you have to trust the event and understand every part of the market you're trading. If we're trading irrational, my position size is so small that random market noise isn't going to squeeze me. Here's resilience for you guys. Look at that. Resilience trade, A to B. Will everybody be able to trade on Rocket Scooter, broker linked on the chart like TradeBait? Ryan, absolutely. You got to get in now while you can. The $35 a month is how much we're charging. It's $199 a month outside of this extended trial. So you guys ever want to take a plunge and get in when futures come out this quarter, where we've initiated the project already, anybody in this extended trial will be able to lock in a massive discount for the rest of their lives. This is what we're calling the grandfather crew. So 1,000+ people coming through, checking out the trial. Y'all will be our grandfathered crew. So with that massive discount, you guys check it out. But long story short, I know where I want to stop, and I don't allow myself to be lazy and take my eyes off of it. It constantly forces me to pay attention so that I don't let my guard down. To me, it's a psychological thing. If you just set it and forget it, you're letting your guard down. I'm watching the table at all times. I'm calculating my odds at all times. So does that make sense? So when I say the platform is amazing, is we really need to have platform markup, ideal trade for current data in the platform. Well, the platform can't tell you where to trade, right? That becomes slightly illegal. So we can't like have a, it'd be kind of cool for me to just say, hey, trader, buy here and sell here. But unfortunately, you know, that's not necessarily legal. And the liability of that is not something we would take as a company. You know, we can teach you how to read the indications on the platform and give you the ability to program, which we will. And nobody's going to stop you from programming it yourself. Race Samar, if that makes sense. So the irrational rules, I behave a certain way when irrational rules. When we open the ability for you guys to use Pine script to create your own alerts and signals, you can literally write your own code to tell yourself to buy and sell all you want. So we can't instruct you where to buy and sell. Unfortunately, we love to create the world's perfect trading algorithm and hand it out, but we can't do it legally. Thoughts on IWM? IWM's, everything's looking good. Resiliences are strong, so I don't have any fear of the market today. How to choose a strike price for day trading? For day trading options? Why don't we talk about that today? And I need to talk to Ashton because he... Okay. Yeah, so what is your are you guys looking at I'm gonna pull up the Soxa real quick. I think, you know, Nasdaq out the door was the stronger of the two indices, and I really just like what I'm seeing. I think that in general, is there any company that you have your eyes on today that you were looking at? Micron came up on our bull scanner for sure. Like that's one of the ones I saw this morning. Mm-hmm. Today, I like NVIDIA. I saw, you know, for instance, eyeballing kind of one on my side screens this morning. The SOX was looking good. Micron pulled up on the bull scanner. NVIDIA is a nice, strong bull long up, 240 hedge pressure long. And I mean, just looking at the way things are going there, I think there's opportunities in tech. That was kind of one of the stronger of the sectors. Normally, when I wake up and I see like the Nasdaq resilience being so much stronger than the S&P resilience, I tend to look towards, you know, tech, healthcare, telecom, which would be the, you know, the three major hitters of the Nasdaq. But when they differ that much from the S&P, you know, it's something that's more unique or more weighted in the Nasdaq. So I immediately start looking at tech with the resilience difference of 70 versus 50. The 70% is huge. The additional 20% makes me want to look at companies like, you know, NVIDIA, Amazon, Apple, you know, even Pepsi sometimes, you know, that's a huge weight in Nasdaq. But yeah, tech today was strong. I do like what I'm seeing. You know, the idea that inflation is still a thing and the markets are, you know, you're seeing commodities come down because of inflation. You're seeing massive yield changes in bonds. People are starting to look for opportunities right now. In an inflationary environment, you can't have your money sit in cash. So I'm trying to find a best sector or best region to trade in, because you're seeing Wall Street being very long hungry right now. And I think tech is probably one of the better places that you're going to see opportunities to the long side. Just because, you know, we're trading the next earnings, and this is kind of what we're seeing. They've had the biggest amounts of layoffs, I think, in all the sectors as well. So when companies are trimming their fat and getting optimized and being more efficient, you could assume that leading in, whether there's rate hikes or no rate hikes in the next meeting, you can assume that something like tech would probably be operating at peak efficiency because they've kind of laid off the most people, right? So they have the better bottom line of all the sectors, I think. And something like oil and gas, right, with oil prices plunging in general, and also, you know, oil and gas for the longest time, the oil market, the oil and gas companies were begging people not to quit. Like they were, you know, they're offering money for you to stay and not go out, and they're giving you huge raises. So with oil prices plunging and them throwing money at people, you can see that that's one of the weaker sectors. So I like to look at earnings to earnings as far as like picking a good sector. And of course, liquidity maps on Rocket Scooter just show a massive bull positional shift in all of the tech companies. So everything's looking pretty solid there. And I think they're strong going into earnings. I think it's gonna be one of the stronger sectors this quarter. I'm gonna run monthly map or monthly on NVIDIA to 230. Yeah, there's no resistance on the monthlies on 230. Let's do a single date for well, plus you also have to remember, isn't it? It's, you know, we got quad witching and of course monthly expiration. So, you know, traditionally you can see big positional shifts going into the last 2 days before monthly expiration. Like in bull markets, like a lot of the times you'll see the last 2 days can just sell off as people are, you know, or the market's reshifting to find liquidity on this massive expiration. So we've been selling off for the last month, and VIX has starting to trade down. It wouldn't surprise me to see like a 2-day rally leading into monthly expiration in a lot of these kind of depressed tech companies. So I could see NVIDIA still going. I don't see any resistance. I ran a monthly map, looked at single date walls. There's really no resistance at all for any of these tech companies anywhere soon. So NVIDIA is nice, long and strong, you know, bull from here. Yeah, because I agree with the previous speaker that it's pretty strong. So, all right, guys. You're watching you use your product, Ryan. Oh. So the way that and again, if you guys come to today's session, I'll do an overview of Rocket Scooter just really quick. All right, so question, right? DD is 0.46 and we're trading to the bull zone. What do you think about this? What do you think is going to happen? I'm going to test my student here. You don't have to close your... Oh, yeah. Okay. We've traded to the bull zone in the S&P. VIX has a risk interval break already. Ooh, I didn't even notice. So, student. Not yet. No, not yet. VIX hasn't gotten there yet. So the S&P has moved to the bull zone. The question I'm going to ask you without telling you the answer is to decide if SPY opens in the bear zone and moves to the bull zone, are we going to stay in the bull zone or are we going to pull back into the bear zone? Which indication would you look at to determine which zone of the big three? Correct, DD. So what number would you look at for DD? Would you say, first and foremost, rational or irrational today? Well, first and foremost, irrational or rational today? They're red. Red is a bad flag. Broke through hedge pressure, irrational. So irrational, what confidence do you need on DD to determine bull zone or bear zone? Correct. 0.4 to 0.6. So where are we at right here? You said from 0.4 bearish, 0.6 bullish. It's 0.46. So what do you determine from that? Yeah. Yeah. Can y'all hear her? Man, she's good. Correct. You've got all of them right. Should we look at the next indicator? Right. It's choppy. 0.46 is not enough for me to make a determination. So I don't know. So it is slightly more bullish than bearish. I mean, sorry, bearish and bullish. But it's not enough for me to take action. So I wouldn't take action. If it was like 0.3, 0.2, 0.1, I would short it back down into here, right? The fact that it's kind of sandwiched in the middle, as she said, it's probably choppy. We should look at the next indication. This is 100% correct. So we need to like tie break this, right? So, all right. So this is minus 1, but like, let's say like, it's very close. So I'm going to say minus half. This is my card counting trick. I do +1, -1. I take all my bear black pebbles and all my bull white pebbles and I count how many are slightly more bullish than bearish to see which side of a seesaw I'm standing on. But if something's weird and choppy, I don't even give it a full point and say, yeah, it's a -half. This is just my internal card counting, right? Resilience, long and strong, right? Greater than 10. That's 70 and 90. Holy G's, right? Okay. So that's a strong +1. DD, not super strong. We've also touched the lower DD bands, so there is no rule as to interaction with the bands today. So in all honesty, I'm just slightly more bullish than bearish. This is like, maybe it'll hit here, but I'm not sure. It's choppy, so I wouldn't be making a trade. I'd see this and say, well, it's moving higher. I'm just gonna let it go. If I see this candle and I'm like, ooh, I'm missing out on a rally. No. You feel like you're missing out on something? How much did you make today? Like 1,300? Are you missing out on a damn thing? No. So indeterminable, right? If DD was 0.2, 0.1, oh hell yeah, I'd be looking to short it back to the bear zone. Unfortunately, it's pretty random up in here. So I'm like, okay, what happens here? Well, it doesn't matter because, I mean, you know, you saw me make combination between these two accounts, 3,300 in the paper account, close to 4,000 in this account, plus my real account. What's up? Say that again? What'd you say? Oh, great question. It keeps rallying. Why did we exit so soon? So what we do here is we have something called career trade and gamble trade, right? So career trade is the thing that makes sense right out the door, right? We took the resilience trade. DD was not bullish enough for me to think we're going to break out, even though it can break out. It's a smaller chance it happens. We took the career trade today, or I did, from here to there. That is the highest probability trade, and that's the one we bet big on. Secondary trades, and again, the liquidity map also showed that this was a potential move as well. So everything that happened. In the first hour of the day, it's pretty predictable, as you see, right? As the day starts to progress or events start to change, markets can start doing, random weird stuff. The next trade you would do, or the next type of trade you would do, we call it gamble trade. So if like your career trade is where you have a high probability of winning, you just go in, you go strong, and you take your big win and you're done. Gamble trade, you want to trade with a fraction of the risk. So say if we do our calculation, and our calculation says, remember what our max position size that we calculated is about, 3 contracts, give or take, right? So if my max position size is 3 contracts, I'm going to get in a position of 3 and write it to there. If I want to take any secondary trade for whatever reason, it needs to be small, such that I can take bigger gambles for bigger gains, but also in case it goes the other way, I don't really give back what I made for my career trade. So it's like gamble trades are smaller bets for bigger runs, but also there's less control and less, that first trader out the door is always the strongest one. As you see, it's like pretty scripted, right? At least for today. So the gamble trade would be the second and third and fourth trade. There really is no indication what happens here. So the second trade would be, which I didn't take. On the streams, I only do career trades. I don't do gamble trades, so I don't want to demonstrate that. But if I do take a gamble trade, you hit the bottom of the redistribution zone. Which indicator uses redistribution zone of the big 3? Resilience, correct. So when you hit the bottom of the zone, the rules are resilience will pivot. This will be support. It just trades from open to close. Res is greater than 0. Okay. Res is less than 0. You pivot through here, and this is resistance. So when well, you have to think about it, right? Let's start adding up our confidence. Anytime you hit the open or close of this box, you always consult resilience, because this is the indication that pivots through this box, right? So when you hit the bottom, you come down and consult, where's resilience right here? Is it positive? And down here, also positive. So that's a gamble trade long entry. And I'll put my mouse here just to make sure it's like greater than 10. When you move your mouse, you see how the numbers on the left will reflect what the value is where my mouse is. See, like those white numbers? So right here, when it touches the first time, res is 15 and 40. That's great, right? It's bouncing through it even lower. It's 13 and 35. Still great. So like I would long and long on a gamble trade. And another thing is you have hedge pressure right here giving it additional support. So resilience is telling me this is going to support. Hedge pressure is telling me this can likely support. So I've got a nice little support zone right here because they're 2 different tools. And with res being positive, again, I can take that specific pivot through the box and gamble trade to the other side. And as you see, there's that first resistance where it bounced off of it. So scalping through the box is one of the better ways to do gamble trades. You can scalp all day long. I usually stop doing it right about lunchtime. So if a second opportunity arises, I will take a scalp there. But instead of doing like 4 or 5 contracts, I'll just do 1 or some micros, something really small, just to add to the fat. Now, again, I like to get my trades out of the way and be done so I can get on with my day. But if you want to sit here and trade all day, you have to realize that your second and third trades, if you do like want to take a short or flip-flop the other direction, like we long today, we can short, we can long, do whatever. Your second trade must be smaller than your first trade. Your third trade must be smaller than your second trade. So you progressively trade smaller. Did you really long off for res? It wasn't that positive in the morning? Yeah, it was. When it first opened up, the initial jolt pushed res to like 60, and that's what made me choose the long. And then it dropped negative, and I go, oh, wait, maybe there's a bug. It must have screwed things up. Because I didn't see it. It was off the screen. I was like, that's really weird. I didn't see the data. It was actually right there. And I messaged my team, and I go, looks like there's a bug in resilience because it never went positive. But then, again, like I said, I was so distracted, I wasn't paying attention. That was pre-market, and resilience did go slightly positive. So basically what it means is some stocks open a half gap. They went up and started trading down. And at this point in time, I was really fearful of my trade. And then once it started stabilizing, like 5 minutes in, I was like, okay, thank God. I actually thought I got into a losing trade. Initially, with the market opens, resilience being like 65 and 70 is why I longed. Yeah. Why wasn't the second bounce off a hedge pressure a good trade? Liquidity maps, I only take the first trade. Liquidity map, when buyers and sellers find each other, that's the most predictable trade. Now, you can still use liquidity maps for pivots, like if you're trying to find pivots. But the second trade, like I say, must be smaller than the first trade, and the third trade must be smaller. So imagine if I do like 10 contracts on the first trade, and I do 2 on my second trade, and then 6 micros on my third. Each second and third trade must be smaller because the probabilities are lower as the day goes on. So I don't trade second bounces off a hedge pressure that often. You can, I would just put pennies on the table instead of dollars, right? Like I said, you trade however you want. I like to make one career trade out the door, maybe a gamble trade if I see it. And I like to trade resistance to resistance. I don't like to trade random breakouts like this. Trading from here to there is an ideal resilience trade. Pivoting from box side to box side. Resilience was positive. You hit the lower band. Everyone Rocket Scooter knows that's a scalp to the upside. Right. This isn't short enough for me to take action on the short. It was short. It's below 50, which shows there is resistance there. But as you see, it's still in the noise range. So in the noise range, obviously monthly hedge pressure break causes a massive squeeze. People say it doesn't guarantee a massive squeeze. Spence, if you're here, was asking like this monthly hedge cause squeezes, and sometimes it does, right? This is a gamma squeeze. So when you break through hedge pressure, this is possible just because of the irrational portion of that. Actually, all things are irrational now. We even triggered UVXY. All signs are irrational. You see that? So that's pretty much it for the day. I'm going to call it a day. Everybody go to the Rocket Scooter Discord really quick. We're going to take a break, maybe tune in a little bit. We're going to have ourselves a good old time today. Go through some education, some training. First day trading, funded account up $600. Not bad. This is real money. That's my real money. Yay. Built a little fat off of the drawdown buffer is $1,250, I believe. So 114, or let's see, 148. $148,750 is the static drawdown. So as long as I build off of that, this is funded account money, so that's good. This is the 250 account. I need to get this to 265. That's the rule there. I am 6K away, so I'm 60% of the way there. I think Nicole is about $1,000 away or less of getting her 150 funded account. As you guys will hear me talking to her, and she's telling me DD and telling me resilience while she's sitting here. Very impressed. This girl is spending like 6 to 8 hours a day studying Rocket Scooter stuff. She's never traded a day in her life until she started doing this last week as well. Don't say thanks, Matt Ray. I'm not trading for you. I didn't do any of this for y'all. Y'all are doing this yourselves. That's the thing. I didn't tell anybody to do anything. Don't thank me. Can't join the Discord. All right, everybody do this really quick. Really quick. Getting an extended trial. You can't get into the Discord. Is the link not working, or you're just kind of stuck at the get help section? Makes sense. Muslim say sure. Thank you. Great session. All right, love you guys. Thanks for tuning in. This is a fun session. So then you guys see on the screen, I was just double checking to make sure the UVXY rule triggered. Everybody see we touched the bottom of the bull zone, and now we're still in the bull zone. It only becomes green again when you drop below the bull zone. I love it. All irrational flags today. Isn't that crazy? I love our alerts. Amazing. Okay. Anybody have help getting into the Discord? You You owe me a beer, bro. Come out to Houston. We'll have a beer. Love y'all. Thanks for tuning in. All right, go over to the Discord. Rocket Scooter. That's our name. Don't wear it out. Or wear it out. Tell everybody you know. Literally, you pay hundreds of dollars a month for Discord. Thousands of dollars for, I don't know, ridiculous technical analysis programs that still use the same crap and been in the 50s. This stuff never worked then. It's certainly not going to work now. Institutional traders do not use charts with technical indicators on them. They stopped doing that in the 80s when computers took over. Algorithms are the way to go. Analyzing order flow and positional risk is what we do. We are paving the way for the newest technology in the market, positional risk analysis. I know where the market makers are. I know where they're hedging. I know where the institutions are positioned. I use that for my trades. No more multi-time frame confluence. No more 10 charts for the same ticker. No more noise and Star Wars laser battles blinding my retinas while I trade. I have a simple chart, simple setup, 3 easy tools I use. Make all my decisions. I'm in and out within an hour. I use risk management, position size management, stop philosophies. Everything I do is the same every day. I teach a process. There's a boot camp you can join, trader training program, $35 a month. It is $200 a month normally. Get in, get grandfathered in, be in our inaugural group. Join the cadets today at Rocket Scooter. We love you guys. Join up. It will never, ever, ever be $35 a month ever again. That unlocks all your data feeds as well. Charlie scanner, watch list, everything. Get ready to go. We're doing it. We love you guys.